Hello, and welcome to the Pay for Ed YouTube channel. My name is Fred Amrine. I'm the founder and CEO of the company, and we are here to prevent and solve the student debt crisis. And this video is on student loan repayment for the recently married couples, which there's not a great deal of information out there because of how it needs to bring together both your repayment methods and taxes, which we'll explain in this presentation. First of all, I just want to congratulate you on getting married and welcome to the married institution. I'm happily married for quite a few years, and just hopefully this is a good start for you. What we're trying to do here is help you plan, and since many of you have student debt as college has gotten very expensive, that you need to properly plan for this, for your financial future. What you need to understand is there's 126 different options to consider if both of you have federal student loans and are using the income-driven repayment methods. The issue that you face is that it's a combination of getting the proper tax advice and loan servicing advice, which is not always readily available to you, which you'll hopefully get out of this video. A simple change of what loan repayment methods or how you file your taxes can add up to hundreds of dollars a month in positive cash flow that you need to consider. Here's the problem. The problem is the information for you is siloed. The loan servicers typically will try to put you in the lowest repayment methods, but only really address the individual. It's difficult for them to consider how you need to file your taxes because it's crossing into the bounds of giving personal financial advice. Your tax advisors are looking to lower your taxes and don't usually see how it will impact your student loan repayment. So the advice usually given there, because you may need to file your taxes married and separate, which will typically make your taxes go up, but may be the best option for you on your student loan repayment, is not usually visible for the tax advisor unless you provide that advisor with the proper information. And then you have the banks and lending companies, and their goal is to move you into refinancing the loans, which may be a good option for you, but you need to consider your different options before you make that decision, because once you refinance, you can no longer go back to the federal programs which offer the most flexibility in repayment and in forgiveness. And each of these have separate goals. So that is the other problem that we have. Each of them are trying to do their own jobs, but for you, you need to combine all these in one view. And that's what we do with the Pay for Ed solution. We give you that comprehensive and objective view. So let's see how we do that. So first of all, when you go through the process, now that you're married, you'll have two choices. You can either file your taxes married and joint or married and separate. And that is a big difference, and you probably will need to look at your taxes both ways if you're using one of the income-driven repayment methods. On the right-hand side, you can see that you've never filed as a couple. So you have the choices of one, staying as married and separate, but there are tax consequences to making that decision. As an example, the student loan interest deduction, if you decide to file your taxes married and separate, will be lost. Where if you file your taxes married and joint, it will be available to you. But if you file your taxes married and joint, your adjusted gross income numbers could be much higher depending on what your loan repayment methods you are using. Could not be the proper advice also. What you also need to consider is how this will affect your recertification if you are using one of the income-driven repayment methods, and timing will be critical. In addition to how you file your taxes, your debt structure. So as I said, if you decide to refinance, that will limit some of your loan repayment options and also how you should file your tax. So in the federal loan repayment methods, if you have private loans or Parent Plus loans that you're paying back, they will not be factored into the federal loan repayment methods. And that's why refinancing could be a good option for you. But again, you have to look at the different repayment options and how it's going to impact your cash flow. With using the income-driven repayment methods, what you need to realize is not managing the typical or traditional mindsets on loan repayment, such as a lower interest rate or lower terms. That could hurt you from a cash flow basis. What you need to manage is what's called your adjusted gross income, which is directly related to your taxes. Another big issue that you need to consider as a young married couple is if you should co-sign for your spouse. You need to make sure you evaluate that properly, because if you should co-sign the loans and now you want to buy a house, depending on the debt amount, that debt will be totally under both of you. Unlike if you should not co-sign for your spouse's loans, the loan will only be against the spouse that has the debt. And also you need to consider loan forgiveness, and specifically public loan forgiveness, as this may also be an option to reduce your debt and that payment over time. Just want to show you how it's all interactive. So as you decide to file your taxes for the first time, as I said, your adjusted gross income is driven by how you file your taxes. And this is where the tax advice becomes the problem. The tax advisor is typically trying to lower your taxes, which will be driven off your adjusted gross income. If you are using one of the income-driven repayment methods specifically, by filing your taxes married and joint could actually be a detriment to your loan repayment amount. Using the income-based repayment, the pay-as-you-earn, the repay, income contingent repayment method, and the new IBR methods. Because once you make that decision, the fluctuation on what your adjusted gross income will be used for that calculation will drive your monthly payment, which will then determine if you will have extra money in your pocket or if you qualify for public loan forgiveness. All of these things will drive your financial future so that you can purchase the house, start a family, or the other goals that you may have as a couple. Just want to give you a quick view of what it looks like and what you need to consider. So this is one person. As you can see on the top, it's the 126 options that we talked about. The combination of filing our taxes and how the debt is structured. So you can see the blue line is we are filing married and joint, and they both have federal loans. And if you just go down that row, you can see how different the monthly payments can be. And if we move across under pay as you earn, we could be at $322. If now only one person has student loan repayment, we could be at $586. And then if we file married and separate, we could go back to $286. So here's the variances that you need to consider as you go through this process, and that combination of how you file your taxes and how the debt is structured, that combination along with the loan repayment method you're considering could fluctuate significantly. Once you make that decision though, you need to then roll that into your monthly budget. A lot of times if you do a private consolidation, yes, you'll be saving money over the life of the loans, but sometimes that becomes a cash flow problem for you, and it can make your lifestyle very difficult. So you need to look at, should I do a refinancing decision? And if you should do the refinancing decision, remember that you cannot go back to the federal loan repayment programs of the existing loans that you refinance. And the federal loan repayment methods do offer the most amount of forgiveness and loan repayment options, especially if, say, you're going to at some point maybe work part-time because you're going to start a family. The private loan refinancing could actually put you in a cash flow bind that you need to consider in the future. So in conclusion, just wanted to wrap up a few things here. You need to understand all of the combinations that you have and options in both repayment, tax filing, and how the debt is structured. I highly recommend that you get your taxes done by a professional and see what the tax consequences by each method. And then look at what your options are on your repayments. By having both of this information with our tool, you can see the various options that you have in front of you. And you need to communicate that with the tax advisor to properly make the best decision on your tax filing status. By managing your AGI, we also can maximize the IDR repayment methods and maybe public loan forgiveness if you do qualify. Again, this will also help you if refinancing is your best decision, and it may be, but you need to look at the numbers. And then properly planning for other life changes, goals, as we said, maybe career changes, maybe starting a family, buy a house, will all have an impact on the decisions you're ready to make. Hopefully you found this helpful. Please go to our website and register, and also subscribe to this channel. We are your trusted second opinion for student loan repayment and college funding. Thanks, and have a great day.